Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Wednesday, the 10th of the 2nd, 2021, and the time is 0455 GMT. Asian session coming to a close, European session about to fire up. Our lunchtime is the North American session. Right, make a start then. Yesterday, Tuesday the 9th, we had an unopposed negative driver in the dollar at minus 233. No backdoor flows then. Front door flows going very evenly into the other three complexes. The yen just taking it as the positive secondary driver. So you've got opposing positive flows coming from the dollar weakness going the other way, and you've got the yen at plus 79, the euro at plus 73, and the pound at plus 71. So not much in it, and that was an activity of 23 plus or minus 233. Intra week then, so it's getting more relevant. Well, Wednesday we're midway through. From Monday the 8th to the 1st open to about 15 minutes ago. Again, we've got this unopposed negative driver in the dollar at minus 272. No backdoor flows again, and the pound is sucking the most, plus 106. Next the yen, plus 85, and the euro at a significant positive rock, plus 81. Activity plus or minus 272. Intraday then, before we start talking about it. So intraday, so this is Wednesday, 10th of the 2nd, open to about 15 minutes ago. So this is basically what's happened in the Asian session, and we've got the dollar like so on the negative. We've got the pound, and then we've got euro and yen, just to be awkward here. So right, so we've got dollar minus 5, pound plus 1, and the euro and the yen are plus 2 apiece. So we've got a negative unopposed driver in the dollar. We've got a positive rock in the pound, and depending on, take your pick, we've got a positive mover and a positive secondary driver, which are interchangeable on the euro and the yen, and that's on activity of plus or minus 5. Right, so as usual then, what's going to knock this about? Well, today then, the 10th, which is what the 10th, which I don't even know what day it is. That's not unusual. Right, so today the 10th, Wednesday, we've had China CPIs. They came in a little bit soft at minus 0.3. And the other thing about China is we're just moving in tomorrow, so this is the last day for China for a week. They've got their lunar break, whatever that means. Well, if you're having your lunar break, then enjoy it. I'm pretty ignorant about what you'd be doing, but anyway, that lunar break is from the 11th tomorrow, Thursday, right the way through, including Wednesday the 17th next week. So that's a massive market holiday for the Chinese. Something to bear in mind. Okay, so right, today then we've had these Chinese soft CPIs. And we've got German CPI, US CPI to come out. If you remember, the German data is starting to look a little bit creaky. It's starting to roll over, so that's something to bear in mind as well. We've got a Bank of England speech and a Fed speech later today. See if they rock the boat. And then Friday, this Friday coming, we've got GBP, GDP. Difficult to say. Anyway, we've got that coming out on Friday. Right, so let's have a look what's going on, or has been going on. So make some analysis then. So the key takeaway from all these flows is we've got the dollar as the unopposed negative driver, and as you know, that's normally one of two things. It's either a floor or the start of a ramp down. Now, obviously, the last couple of days the dollar's been selling off, so it has actually been the start of a ramp down. But eventually, you become right eventually, and there will be an exhaustion in the selling of the dollar, and it will become a floor. Right. So yesterday we had unopposed negative driver at 233. Notice the activity is quite strong as well, market activity. So, and then we've got even flow. So the market's just basically sucking up all these dollar negative flows in a positive manner fairly evenly. And then over the week we've had the same story. And of course we're get the donut of the week award because we've been short the pound, and the pound has been sucking up the majority of the opposing positive flows. But anyway, we're still batting and we're still running those trades. Right, so in the Asian session we've got hardly any movement, so I wouldn't take too much into these figures, but the dollar still managed to be the negative unopposed driver, and then you had a bit of, because it's carrying on this sort of, the market doesn't know where to bung all these opposing flows. They're literally up to their neck in it. That you're getting this switch out of the other complexes, euro, yen, pound. Right, so let's make some sense out of this. Right, so what's happening in the wider market as well? Well, if you look at equities, you know, in the US particularly, you've got Wall Street, the tech, and the S&P. They've all pumped above their highs, and arguably Wall Street has caught up. Basically, the Dow has caught up. So, and then gold. Well, gold has had two things going on really. It's had a very weak dollar, which gold likes. So gold says thank you very much. So we've had a reasonable bounce in gold, but it's also in theory, with that drop in the dollar, the gold should have been going to the moon, but it hasn't. And the reason of that is because of the yield issues. You've got high yielding assets like equities really steaming, and therefore the market players are putting their funds into the fastest moving assets, which are at the moment equities, US equities, and generally equities, and therefore gold was getting a good kick up the pants. It hasn't got the full benefit, so that's one thing to look out for. Oil still steaming. Oil's just on a tear at the moment, on the up, and copper was lagging. If you remember, copper did have this sort, and then it was dirging around there, and then it went up a bit more, sort of begrudgingly tried to catch up when equities were steaming, and it has now pretty much steamed. So copper is pretty much up to its neck in joining the party. So that's something to bear in mind as well. Right. So where are we then? Well, we got rid of our pound short CAD trades, and the only reason we got rid of them is because the market is very congested, and so they don't exist for us anymore. We're not short anymore, and we took obviously a bit of a hit on those. We'll round up any figures as and when we finish our chaotic trading. But so that's gone. We're running the euro pound longs, which has sort of steadied at a painful level. We're running pound dollar, pound yen short, euro dollar short, and we're running something else as well, which I'll think about in a minute. Anyway, so let's do this. Dollar, euro, yen, pound. Right, when you're talking about the yen, basically you're looking at the equity market transmission, and equities have been steaming. The yen's been in theory weakened by the equity transmission, but it's actually been pumped because the dollar is actually falling faster than the yen's falling. So that's one way of looking at it. So that if you're talking about the yen, that's something to bear in mind as well. Now the pound, the models say we're at a top, so the pound complex should fall, but the market has obviously had other ideas, and likewise the models say the pound is at a floor. So the dollar is at a floor, and so that's that, and the euro is at a top as well. So that's where we're sort of looking at, and the yen is at a floor. So our projections for the dollar are up. The euro is down, but depending on what pair you're in, the yen is up and the pound is down. So, however, the market is still punching away on this soft dollar idea, but, and it's a big but, you've got to remember we've got this lunar holiday. People are going to start getting very twitchy about profits. That's one thing. People burns a hole in the old pocket, and they've got to cash in at some stage. So when the market starts profit taking, and that would be a nice thing for us to be doing, but we're not. But when the market starts profit taking, then you're going to see a run for the exits, because people won't want to lose all these gains that they've got. So you're likely to see. This is likely to be the last knockings of dollar weakness. I know we've been saying this for a while, and we've been wrong for a while, but eventually, trust me, we will be right. And with this lunar holiday coming up, you may well see today quite a bit coming off various asset classes. So that we're carrying on belligerently running our red trades. This is what's happening in the wider market, but it's likely we're going to see significant profit taking today as we move into this Chinese lunar holiday. So I hope that was useful. See you tomorrow for the daily briefing. Thank you very much.